Have you seen the ads with the celebrities from the 1980s who are talking to you about reverse mortgages? What are they talking about? Why would you want a reverse mortgage? And of course, those celebrities are chosen because they're getting older and they're talking to an older crowd who actually recognizes them. So what is a reverse mortgage? I'm Patrick Cawley with Keystone Elder Law in Mechanicsburg, Pennsylvania. And this topic comes up occasionally with long-term care planning and with estate planning for people in their later years of life. You really only want a reverse mortgage if you don't have a lot of cash, whether it's cash in the bank, in a brokerage account, a retirement account, something where you can draw out money. If you have that, you don't want a reverse mortgage. If you don't have that, and all of your net worth is tied up in say, the house you have that might be worth a couple $100,000, well, you have money, you just can't get your hands on cash. So the reverse mortgage is the opposite of a mortgage. The lender pays you once a month and it draws down the equity that you have in that house. That's a way to sort of get cash out of a house that you own where the mortgage has been paid off. A lot of people think, well, this is how I will pay for long-term care. If I need an extra level of assistance in my home, say somebody to help with getting me dressed, maybe getting me bathed, meals prepared, cleaning the house, but you don't have the cash to pay for that kind of assistance, well, the reverse mortgage allows you to draw cash out of your home and pay for that kind of help. The downside, though, is that your reverse mortgage is going to say, look, if you're absent from your house for 30 days or more, then we're done. We're not going to send you checks. It's time to pay us back, even if that means selling the house. Well, that could be a real reality for you if you have to go up a level of care to personal care or assisted living, where you're living in a community and there are professionals helping you around the clock. If you have to go to skilled care, the highest level of care, you are certainly absent from your home for 30 days or more, so now the loan has to be paid back, and it has to be paid back pretty quickly. So the house will have to be sold and so on and so forth, or your family will have to come up with the money. So that's the downside of using a reverse mortgage for long-term care. Let's say you do the reverse mortgage because you just need to pay your bills, you need cash, and all you have is your house. Okay, well, at the end of your life, what are you sticking your children with, or your heirs in general? Well, not much, because as long as you weren't assuming that they were going to get the house and live there, that probably won't work. But if you want them to get some money from the house, all that will have to be done is the house will maybe have to be sold, and only the amount of the loan that the lender has been sending you will have to be paid back. Any other equity that's still in the house, so after you sell the house, you pay back the reverse mortgage, you pay the real estate agent, any money that's left will stay with your children. How much that will be, who knows? It just depends how much and how long you're getting those loans through the reverse mortgage. But that's generally how it works. There is a cap on how much your children would be stuck with. It's either the value of the loan or 95% of the appraised value of the home, whichever is less. So there is sort of a cap on how much you'd be sticking your children with. Most likely, it's just going to be sell the house, the loan gets paid off. But be very careful about using it as a long-term care strategy for the reasons I said. So if you have questions about this, we are at KeystoneElderLaw.com. You can send us an email, info@KeystoneElderLaw.com. Happy to talk through whether a reverse mortgage applies to your circumstances, whether it would be a good idea.